Yo, what's up guys? Welcome back to another YouTube video. In this video, I will be talking about support and resistance and the best way to apply them on your chart so your chart doesn't look super cluttered, but that you have a clean overview of your support and resistance zones so you can be a more profitable trader. Now, support and resistance are levels where price is struggling to break through. As you can see right here on the example, below you can see that we have a support because price cannot go lower than that zone. So as soon as you form more touches of a support, that's when a support is stronger and has more value. Now here you can see a touch, another touch, and then on top we would draw this red line right here. And as you can see here, we have a resistance. Now here, price could not manage to break above. That means that our resistance always is applied like a ceiling. Now imagine support and resistance as a floor and a ceiling. Now as long as price maintains above the support, it will always respect the floor. And if it comes up and it tries to reach the ceiling, price cannot break above. Now, of course, there are breaks, and that would be considered that if a resistance is broken, it will normally turn into a support, as you can see on this example right here. So here we have the breakout candle, we broke above, came back down, and now you can see that we retested the previous resistance zone, and it will automatically change into a support if it's respected. Now the same thing vice versa. If we have a support zone and the price breaks through, we always have to wait for the retest back into this zone, and then it will usually hold as a ceiling or as a resistance. It is also important to know that these levels are not fixed. That means that they can change over time, and they're also not only lines but more zones. So let's look at an example on the chart. Okay, so now we're on the chart on Euro USD, and we are on the 4-hour time frame. And as you can see here, we have a clear support. So what you want to do is you want to take the horizontal line on TradingView and you want to apply this like this. Now what you can see here is that we had a form of a support right here, and right here, meaning that we have multiple touches, and this verifies that this is a valid support. Now the same thing on top. So over here we would place our line right about here, and here you can see that we had also multiple touches of the resistance, meaning that this resistance is a strong and valid resistance as well. Now keep in mind that support and resistance zones are called zones because they're not only lines. So what you can also do is just draw a rectangle around these areas. So here we can draw one all the way through here. And now this zone is going to include all of this price range here as well. Now you can duplicate this zone and do the same thing again. We want to clone this, and now we want to drag it up to the resistance right here. Now due to the zone, we are now also including, for example, this wick right here or these wicks right here. So every time a price gets near our zones, we should have an alarm and be informed the price is near them, and then we can trade off of them. Now of course you can take trades based off support and resistance, and I'm going to show this to you guys right now. So of course you want to make sure that you always trade with a trend. Now let's take this here for an example. In this case, we can see that we are in an uptrend forming higher highs and higher lows all of the time. So what we now want to wait for is for price to create a beautiful support structure, and you can recognize that after a bigger bullish push. So here we would have our first touch on the support zone right here, and if we look to the left, we can see that it also acted as a previous resistance right here, making this first touch already very strong. But what we want to wait for actually is for another touch to verify as a support. And now here we had our second touch. Keep in mind, like I said, we are in an overall bullish trend, so here you could have looked to enter for a trade. Now the same thing on resistance. So we see a first touch on the resistance right here, and now we want to wait for a second or a third touch to enter the trade. So here we had our second touch, and then finally we had our third touch, which is also a form of an overlap, but we managed to close back below. Now every time when price is rejecting our resistance zone, we can look to sell. So let's say that we want to enter for a sell right here after these bearish engulfing and evening star pattern. Could place our stop loss above the last high and our take profit down to the last low or to the support zone. This would already be a 2.3 risk reward ratio trade. Now this also as an example. Now price got back all the way to our resistance once more. So what we can do now is we wait for an entry signal on the lower time frame. here on the 4-hour time frame, we had this bearish engulfing candle rejecting our resistance zone. So we want to place our stop loss above that high. We want to place our take profit all the way down into our previous support zone. Now, this price did not really reach this previous level right here, but you could have also closed the full trade a little earlier, as it will already have been a 3.5 risk to reward ratio. And that just keeps going on and on. Of course, the same thing if we want to buy. So we want to wait for a break out of the resistance, which we had here. So here we had a breakout, and then we want to wait for a retest back down into the support, then wait for an entry signal right here to then look to buy all the way back up into this previous resistance zone. Now let's look for another example. Now in this example, what happens if price still doesn't have a lot of touches to verify a support or resistance zone? Now here you have a great example. As you can see here, we had a touch of a resistance. Now this is a resistance. Why? Because this will be the swing high of the price. So every time when we have a zone where price reaches and reacts super strong from, like you can see here, we have this huge bearish movement all the way back down. Now if you see this kind of movement in the market, you can then place a form of a resistance right here. Now this would be our first valid resistance zone because we had a huge bearish reaction off of it. Now skipping forward, when we go down, we also had a huge bullish push from this zone here. So price did not manage to break below and had a bullish reaction from it. So here we can also draw our support zone. So now we have our two support and resistance zone. So here we have our swing high, the highest point that price got to before having some huge bearish volume. And here we have our swing low, the lowest the price got to before having a bullish push. So now we want to continue skipping forward, and we can see that price managed to reach our previous resistance once more. So when that happens, we want to be active on the chart and just wait for an entry signal to enter for a sell, which we got right after. So here we have a bearish engulfing candle and a form of a evening star pattern. Let me zoom on into that right here. So let's say we enter here for a short. We want to place our stop loss above this zone to give it some breathing room, and then our take profit all the way down into our previous support. And now skipping forward, well, let's see what happens. Okay, so here we finally managed to hit our take profit since price came back down all the way to your support zone. And that is why trading between support and resistance can be super helpful to increase your win rate and apply that into your price action strategy as well. So of course, you should not only trade based off support and resistance, but you should use it as a main factor or key factor to implement into your strategy. Now, if you want to use this as a strategy itself, I would highly recommend you to use support and resistance, learn about candlestick formations, and then have another third confluence, for example, a simple moving average. So every time when price crosses over your simple moving average, gives you an entry signal for a sell or for a buy, and is acting off a support or resistance, that will be a nice strategy for you to then look to enter on the trade. Now, when applying support and resistance, another important point that you should know, that you should only apply support and resistance on a nearest price action. I can show you an example. So here we are on the daily time frame. So what I want to mark off are my support and resistance zones on the daily time frame on the recent price action that we have here. So yes, here I could place another form of a support, maybe around here, and another form of a resistance right here. Meaning that I am only trading based off the information the price has given me these last few days or these past, let's say, 2 weeks. But what we don't want is, we don't want to go back all the way here and place some random lines up here, maybe here or here, because in that way you would just clutter your chart and it will be much harder for you to see what price is actually doing right now. So in order to keep your chart clean, stay focused, just use the recent price action. Now that's it for today, guys. I hope you enjoyed this video, and if you did, make sure to leave a like, comment, and subscribe. And if you still don't know how to trade but you want to get started in 2023, then I would highly recommend you to check this video out right here, because there you will have a step-by-step on the steps that you should take in order to start trading this year. That was it for today, guys. I'll see you on the next one. Peace.